Hello, and thank you for joining us. This presentation is about health savings accounts, which will be offered to Dickinson ISD employees in the next open enrollment session. This is a brand new benefit being offered, and so we're going to discuss it today and hopefully answer some questions you might have about health savings accounts. So what is a health savings account? It's a tax-advantaged medical savings account available to those who are enrolled in a high-deductible health plan, an HDHP. In the case of Dickinson ISD, choosing the TRS ActiveCare 1 HD qualifies as a high-deductible health plan. The minimum amount to be considered an HDHP is $1,350 for single and $2,700 for family. TRS ActiveCare 1 HD, in fact, meets those requirements, and therefore it qualifies for a health savings account if so chosen. Important note, many of you are probably familiar with flex spending accounts. We're going to highlight some of the differences between that and an HSA, but you can have one or the other, you cannot have both. So if you were to choose TRS ActiveCare 1 HD and wanted an HSA, you could not also have an FSA in addition to that. So let's talk about TRS ActiveCare 1 HD. For the coming year, an employee-only contribution of $64 per paycheck for the premium. The next level up is ActiveCare Select, which will be $153 per paycheck. So you're talking about a premium difference of $89 per paycheck. If you were to then have an HSA along with that and take that $89 each paycheck, after a year, you would have over $2,100 saved in a health savings account. So the first step is really deciding if TRS ActiveCare 1 HD is right for you. It's a personal choice that you've got to make. I highly recommend sitting down, running through all of the numbers and taking a look and seeing if that's something that is right for you. So some things to consider: if you're generally healthy with very few doctor visits in a typical year, then this might be a viable option for you. If you're not on expensive medications that are on a recurring basis, or you're not planning on any major procedures, TRS ActiveCare 1 HD could be right for you. Also, if you're not involved in high-risk physical activities such as snowboarding, basketball leagues, etc., anything where you could sustain serious injuries, that would then eat up a lot of medical need a lot of medical funding for procedures to correct those injuries. So we did talk about the flex spending account a little bit, and the biggest difference between this and a flex spending account, there's two. One is it's not pre-funded, so you fund it as you go. So instead of getting, let's say you decided you wanted to do $1,000 in an FSA, it gets fronted to you, you pay it back through your paycheck. With an HSA, the funds are deposited each pay period, and they're not pre-funded for you. Really the biggest difference is there is no use it or lose it feature. So all deposits that are made to that HSA are your funds, your deposits. At the end of the year, those roll over. There's no period where, let's say you haven't spent all of your FSA. At the end of the year, it's gone. It's lost. With the HSA, it stays in the account and the money is yours and will remain yours. Even if you, let's say, are with the district, you've been on TRS ActiveCare 1 HD a couple of years, you decide going forward, maybe you know you're going to be having a baby or something, you switch to one of the others, you keep that money and you can still use it for qualified medical expenses. You will just no longer be able to contribute to it because you're no longer on a high deductible health plan. So that's the key differentiator here, is the money is yours, it stays with you. Contributions. So Dickinson ISD will deposit the funds pre-tax. So it will shave some dollars off your the amount that you'll be taxed on for income tax. You can contribute extra if you want. And then, so contributions are tax advantage in one of two ways. They're tax deferred, which is the pre-tax. And then if you were to make additional contributions yourself, those could possibly be tax deductible, very similar to a traditional IRA. The contribution limits for 2019 are $3,500 for a single person, $4,500 if you're age 55 or over. For a family, it's $7,000, $8,000 again if you're 55 or older. So you cannot contribute more than that within a full year. And the year on a HSA runs January 1 to December 31st. So for example, let's say you wanted to contribute to an HSA after open enrollment and your plan starts on September 1st. You could fund it a little bit if you wanted to, but you could only put 4 months worth of that limit. So you would divide that limit by 4, and that would give you the total that you could possibly put in from September 1st to December 31st, because they do a calendar year, not a school year. Withdrawals, the funds can be used for qualified medical expenses, not only for you as the account holder, but also for your family members, such as spouse and children. So in the case of my wife, she is a teacher in a local district. She has an HSA. She can use the HSA to pay for my medical care, my medical expenses, or the kids' medical expenses in addition to her own. And you do not need to obtain advance approval from either the HSA trustee, which is in this case is us, or the medical insurer to withdraw the funds. So we'll get to that in a second about how you use the funds and how they're made available to you. Qualified medical expenses, they include the cost of services and items covered by the health plan, but subject to cost sharing, such as the deductible, co-insurance, or co-payments. Examples would include dental, vision, and chiropractic care, medical equipment, such as eyeglasses and hearing aids, and transportation expenses related to medical care. The IRS has a document that has all of the qualified medical expenses listed. That is available on our website from the same area that you're maybe viewing this webinar from. So I would encourage you, if you're considering this, to download that document and take a look. Withdrawals, we will issue a debit card that looks just like that one on the screen. It will be a chip card that you can use for most of your medical expenses. Very few medical expenses these days can't be paid using this card. We do not issue checks on the account. Also, no online bill pay. You can transfer from, if you had a checking account at the credit union, in addition to the health savings, you could use your regular account to pay for those and then reimburse yourself through an account transfer. The key being that you're really going to need to keep good records in the event of an IRS audit. So funds can be withdrawn for any reason, but withdrawals are not for documented qualified medical expenses are subject to income tax and a possible 20% penalty. So basically what this is saying is stick to items on that qualified medical expense list that you can get from the IRS and use the funds only for that. So you should keep all of your documentation for your qualified medical expenses. You don't turn those into anybody. You don't turn them into us. You don't turn them into anybody. You just simply keep those in the event of an IRS audit. So those are the only times you would need to produce those records to show that you did use those for qualified medical expenses. So this is important as well. We talk a lot about there's no use it or lose it. The money keeps rolling over. It's your money. So when a person dies and they have an HSA, the funds are transferred to the beneficiary named for the account. If the beneficiary is a surviving spouse, then the transfer is tax-free. So that's important to remember. Again, it's your money. There's no use it or lose it, and it stays your money. And even in death, it's handled much like an IRA in a beneficiary situation. So, quick review: how do you qualify for an HSA? It's only available to you if you select TRS ActiveCare 1 HD. And again, TRS ActiveCare 1 HD meets all of those deductible guidelines to be an HDHP and qualify for the HSA. How can you use the money? You can spend the HSA money tax-free on out-of-pocket medical expenses, such as your deductible, co-payments for medical care and prescription drugs, or bills not covered by insurance, such as visual and dental care. And again, it can be used for yours or your family's, your spouse or children, for their bills as well. Some frequently asked questions: can I keep contributing to the account after age 65? You can keep your HSA at any age, but you can no longer make new contributions to the account after you've signed up with for Medicare. Some people over age 65 who are still working put off signing up for Medicare. If their employer offers a high deductible health insurance policy with an HSA, they can continue to contribute to it. So you can only contribute to it if you are on a plan that is considered a high deductible health plan. Medicare is not. Will I earn dividends on this account? Yes, it is a savings account. We have it structured like our IRAs. You can see here the current rates, so you can see that your money will continue to grow. Important to know, there's no fees on this account, so you're not going to see anything eating into any of the deposits you make. You're just going to see it grow. It's going to grow through the dividends and your deposits, so it's completely free to you. It's also completely free to the school district, so it's a really it's a win-win. So thank you again. We're excited about partnering with Dickinson ISD to be able to offer this new benefit. If you have any questions after watching this or reviewing any of the other material, we encourage you to send an email to hsa@gcefcu.org, and our team will answer your questions. So thank you again.